Hello, trading is closed on Thursday, September 8th, 2022. Let's do our disclaimer, go over our calls, and then make some predictions. It's my trading plan. Why this moves on me, I'll never know. It's my trading plan for Friday, September 9th, 2022. Remember, I can be completely wrong. All trades should be at your own risk. Also, remember, I have personal business this week and I've spent less than my normal amount of time analyzing things. We did an update in the morning and we had two targets. One was 39.5486 that printed. These aren't just targets, they're support resistance levels. Here's your support right at that price. Kind of an amazing thing. The other target was 39.2515. The preferred time frame runs out early tomorrow. You never know, but it looks way out of range to me. So this will probably fail, but it should print at some point, which tells us that at some point this rally's going to give up the ghost and retrace. Another thing which tells us that is you have this impulse down, and you've spent the better part of 3 days trying to correct it, and so far it's an overlapping rally, which is stopped right short of the prior consolidation, and it's just backing and filling at this point. Now, of course, if we gap up and take this out, then it's more than backing and filling, and that's entirely possible. But so far that hasn't happened. During the day, MEJT gave a weak buy signal in the afternoon, but it's traded high enough to satisfy it. To me, this is a rather unimpressive close with 10 minutes left to trade. And what's normally a bullish day, you were trading under all these prior highs. That's weakness. And then with 10 minutes left to trade, you had a wall of buying into the close. Very often, but not every time, very often this gets reversed at tomorrow's open by gapping down. Of course, if you gap up, then it's the real thing. But you really have to gap up and take this high out, or else expect a pullback here, because this isn't the time institutions tend to buy buy stocks with a abandon, particularly when they've had all day long with more liquidity to take prices higher and couldn't even maintain the prior highs. This is a daily chart. This is the 200-day moving average. It's still declining. This is the 50-day moving average. We're still under it. It's a resistance area. Now, resistance doesn't have to hold. We have sentiment readings from the last week, which are compatible with a minor low being in at the very least. But this is still resistance. You can gap over resistance. You can clear resistance, but so far, you're just at resistance. Here's the daily chart. Here's where we said we look for a good rally. We've already had one. Doesn't mean it has to stop here. Let's take a look at this move up. So far, all we have is a 38.2% retrace of the last decline. And it took us 3 days to do that. So for now, at least, it's still weak. Now, of course, if we gap up, everything changes. You have 50% retrace, 61.8% retrace. Those are common places. When you have a retracement like this, you stop right at the 38.2%. It's a sign of more weakness coming. But just because we stopped there today doesn't mean we have to hold it. Does mean if you're going to rally more than this, you really want to gap up tomorrow. Just take a look at recent action on a 5-minute chart. It's possible to count this as an ABC with C equal to twice A. I'm certain other counts work too. but it's more resistance from here. So we have resistance from another of different factors. If it holds, you should see lower prices even if you don't close lower. But if you gap up, which is what bulls need to do, if you gap up, take out this high and preferably these highs, then you've overcome major resistance. And we won't know if that's going to happen until tomorrow's open. Tomorrow has the early low. Pattern has the early low. Doesn't mean you won't gap up. Today's normally bullish pattern didn't close over the early high. And if that's maintained at tomorrow's open, and the open doesn't mean just the opening print. I give it a little bit of time. It's bearish and should lead to lower prices printing even if we don't close low. Gapping up allows the rally to continue. It's possible. It's entirely possible. But the fib retracement, wall into the close, 50-day moving average, and failure to clear the early high all stand in the way. Sentiment readings are compatible with a short-term low being in, but these are not precise timing indicators. They don't preclude trading lower tomorrow. So bulls really need to gap over resistance. The gap over resistance, we have higher targets. If they don't, we should trade lower, and this is just a flash in the pan. So let's see how we open tomorrow. It's the pattern with the early low. Bulls need to gap up. There's a lot of resistance here. It's not impossible that we clear it because of sentiment readings. But that's what we need to do if we want to take us higher, and that's today's call.